Hi, I'm Rick Albert, and welcome to The Key to the City of Angels, the podcast where we unlock the secrets of Los Angeles real estate. With over 300 real estate deals under my belt, I've seen it all, from house hacking strategies that build wealth to helping clients close multi-million-dollar deals in one of the most competitive markets in the world. Every week, I'll bring you expert insights, market trends, and inspiring success stories to help you navigate the LA real estate scene. Whether you're a first-time buyer, an investor, or just curious about what it takes to thrive in the City of Angels, this podcast is your guide to making smarter decisions and achieving your goals. So grab your keys. It's time to unlock your path to prosperity in Los Angeles real estate. Hello everyone, Rick Albert here with another episode of The Key to the City of Angels. I know my backdrop looks a little bit different. I'm actually in our office right now, but regardless, I have the amazing Josh Lawler of the Zuber Lawler firm. Thank you, Josh, for hopping on.
Oh, it's my pleasure, Rick.
Yeah, so we're going to be talking about, you have a law firm that focuses on emerging technologies such as AI, blockchain. So we'll dive into high level of that stuff and then dig deeper into how does it affect the day-to-day person. But first of all, how did you get into this?
Assuming this is distributed ledger technology blockchain, in 2010, I said the two dumbest words of my entire life. Those words were tulip bulbs, and in reference to Bitcoin. I said that to two guys who are both now billionaires. At the time, you could mine Bitcoin on a laptop, and it was going for about 10 cents. So I didn't do that. 2014, I did the same type of thing with Ethereum, which was 30 cents out of its initial offering. We know how those worked out. 2017, everything became about securities law because of ICO mania. And by training, I'm a securities attorney. I was at a very large firm for 6 years doing M&A and finance. That's been my practice area. And I'd also been surrounded by all these really enthusiastic people for 6 years at that point who were clearly making a lot of money. So I started looking into it, and I found a couple interesting things. One of them is that it is a ridiculously profound technology that most people don't really understand, that has like globe-changing possibilities to it. And we can get into that a little bit. The other thing is, for reasons I can't explain, my brain just has a capacity to understand this stuff from the tech stack up. We tend to look at, okay, how does the technology work? What is the business use case? And then we get into what law applies and how can we make that work? Most attorneys, particularly back then, were going the opposite. And if you go the opposite, it's really easy as a lawyer to say, no, you can't do that. So we're saying, no, you can't do that. We were saying, let's see if we can figure it out. And that made us popular. So we've probably represented 120 to 150 clients in distributed ledger tech, which I use as a term for blockchain because there are other ledgers besides the blockchain. Sorry, it's my thing. But short version, we've seen all kinds of stuff in all kinds of verticals and have really expanded our practice that if there's an area of law that touches a token in some way, we're probably pretty well informed about it at this point.
Okay, so can you, just at a high level, because I know that's a whole nother lecture, but like in terms of what is blockchain as a concept?
Yeah. So the way I find is easiest for people to understand this, if you were to go to the dawn of human existence, you might find a person in a cave who is counting mammoth steaks and berries and stone axes and things of that nature. And that is a centralized ledger. And knowledge is power. That person knows what they have. The chief of the tribe might know what they have, but not everybody knows what they have. And certainly the other tribe doesn't know what they have. But that's a centralized ledger. And everything from that point to roughly 2009 has been about centralized ledgers. So if you look at just the way the world works, somebody is counting, somebody's verifying accounts, somebody's being a trusted third party to have escrow so that nobody rips anybody off. The government regulates at the count. They tend to use licenses for providers to have choke points for things like reporting. Like you notice the government prefers not to collect your taxes from you. They want it from your employer. So everything, whether you're talking about religion, society, whatever, everything's built around these centralized ledgers. And that lends itself, for instance, to geographic sovereign borders. Everything is controllable. What a blockchain does, or more specifically a distributed ledger, is it is an automated system that allows for thousands potentially of separate copies of the same ledger so that anyone can make a transaction and those thousands of validators vote on it. And when you hit a certain percentage, in Bitcoin it's 51%, at that point they say, yep, this works. And then they send it off to a different set of nodes, which are the Bitcoin miners. And they're incentivized by being paid, basically. And they use a lot of power. You've heard about that to solve a little equation. And whoever wins gets to make a block. And if you make the block, you're paid. When they make the block, they send that to all of those ledger validators so they can add it to the chain so that everybody continues to have the same ledger. And all this is done in a way where the transactions go from what are really anonymized. They're called wallets, and I don't want to call them accounts because accounts sounds like somebody's managing it, but nobody's actually managing this. And that's why all other things being equal, there's anonymity to it. So, what you're left with is a functional, trustable, open, immutable way to count stuff. And if you think about what that does, it's absolutely massive. So hopefully that clarifies a little bit what we're talking about.
Yeah. So in some ways, it's a centralized location for information so other people can also access it.
It's not centralized. It's decentralized.
Everybody
To clarify, there are what are called blockchain explorers. So every chain has a blockchain explorer out there, and they may be maintained by some foundation somewhere that's specific to it. But the point is that the software that is now in the world autonomously maintains that those blockchain explorers are going to record all the transactions. And anybody who wants to go onto the internet can go to the blockchain explorer and look for particular transactions involving particular wallets or particular transaction, what are called hashes. It's like a long string of numbers that say, yeah, at this time, there was a transaction between these two wallets and that went from there to there. And anyone can see that. In most blockchains, there are exceptions.
Because this stuff sounds fairly complicated. So
yeah.
How is, right? Which is what keeps you in business. How does this basically affect the average person?
So in the early days of blockchain, I would go on a podcast like this or go to a conference and try to explain to people how it worked. And that is a complete fail. It's like explaining how an internal combustion engine works or explaining how a semiconductor works. Most people don't need to know. They need to have confidence that it will work, but they don't need to know how it works. And as an industry, we've gotten over even trying. The big struggle in the industry, which is to the question that you just asked, is that the user interfaces are horrible and the user experiences are horrible. And you have to really want to and have an aptitude for working on this stuff. I can tell you, I'm great at theory and philosophy. I execute like an idiot. Me pushing buttons, it's terrible. I can break a keyboard by touching it. It's rather incredible. So that's a big problem for adoption. And there have been a lot of companies that have tried to solve that by doing things like saying, okay, we're going to take that public-private key pair that's so hard to deal with and manage, and we're going to give everybody an account and kind of abstract it away. But then you're defeating the point of having a decentralized system because now there's a centralized account holder. It's a little theoretical. You get that. However, we have a fix on the horizon. The fix on the horizon is agentic artificial intelligence. Because, well, I am a complete idiot in terms of how to execute. My agent, and there are already many available, is not. It's perfect. And I can tell it in plain English what I want it to do, and it can go do it. So you're going to see, I think, a real explosion of use cases in blockchain. And then even beyond that, the traditional kind of world is now getting used to the idea that, yes, this stuff works, and there's all kinds of different varieties of it, but you're going to start seeing major companies rolling out products that are going to feel to you just like they always did, but going to be blockchain based.
Got it. So it's in some ways it's kind of like a back end deal, and then there could be things that come from it. I don't really care how the medication was made. I just care that it works. And so give me instructions on how it works. This is obviously much more complicated than that, but I'm just trying to come up with a similar.
That's right. It depends on your attitude. If you're a pure user and it's just does it work, then yes, exactly what you just said. There are many people that you could talk to. We call them Bitcoin maxis, but there's all kinds of other varieties of folks who are hardcore, what is under the hood, libertarian, government, get out.
Yeah.
Matters a lot because one of the things is tokens do not stop at borders. So, when you're talking about this stuff and it's the good and the bad, you have to recognize that every distributed ledger that is what's called permissionless is by definition global. And people can be wherever they're going to be, and governments, for obvious reasons, have a very hard time adapting to that. Maybe we'll get into that a little bit later.
Okay, so that brings up something interesting. So because it's decentralized, goes global, there's a lot of information that can go out there. Mm-hmm. So what are we seeing in terms of, I guess in some ways it also makes things transparent in certain transactions. So can you dive into that and how this actually could be a really good thing in terms of transparency, getting information out there, that sort of deal?
Yep. Yeah. So again, it's open, immutable, ledger, transparent. There are things that are called privacy tokens. There are things called mixers that try to mix things up a little bit, so it's harder to follow things. But for the most part, all other things being equal, anybody can go to a blockchain explorer and see what transactions took place. And if you have the aptitude or you have the artificial intelligence agent or whatever it is, you can learn all kinds of things from that. In the industry, the forensic guys have amazing blockchain visualization software that will draw associations from one public wallet address to other public wallet addresses to try to identify where funds flowed to and from. And that's the FBI and DOJ tracking people down. That is, if you're in a family law matter, that is potentially one spouse tracking down what the other spouse did with the assets. So yeah, it's visible in a lot of ways, not all ways, but in a lot of ways.
But why would I want it to be transparent? I don't want people knowing what I do with my business.
Yeah, so it's not anonymous. It's anonymized at first, at least. What the chain knows is the wallet addresses. And what it reveals is just the public address. Nobody has the private keys. And that's known, but it doesn't know that Rick Albert owns this particular wallet. And that's where the early days, it's all crime and it's all drugs and it's all, because it's at baseline, it's anonymous. And there are certain token protocols that are entirely anonymous. They're called privacy coins that have been outlawed in places and things of that nature. One of the things, and we'll get into the real estate use cases.
Yeah, that's what was going to be my next question.
Yeah, it gets very interesting. Jumping ahead a little bit, if we have every piece of property represented as a non-fungible token on a blockchain, that can easily take the place of your county recorder. And there's certain county recorders working on it. Now, that means we can also defractionalize this and no longer need to break things up by county, which is interesting. And in fact, theoretically, at least, that can be done on a global basis also. And in certain countries that don't have as strong of a title system, and that's actually something that's happening, is there, meets and bounds, this is the property, and we're going to give an NFT. And then that NFT that represents that title is something that can be transferred, at least in certain circumstances. You no longer need to run to the county to record your title deed. Whoever owns and controls the NFT can legally have title. Of course, the government has to agree with this and enact statutes that make it work. We have come up with some systems that maybe work even in absence of that. But that's where transparency would work really well. It's you can see all the properties. You don't necessarily know who owns them, by the way. You can see what wallet has it. And if you know what wallet has it, then that's great. But you can see them. You can see how they've been transferred, and somebody could put a lien on them. You can see if something's mortgaged on one. This is all very popular and notably very efficient.
So the interesting part of that is the anonymous part, because one of the biggest challenges in the luxury space is people don't want to know. If I'm a celebrity, I don't want people knowing where I live. I had to have one client who was known in the public eye, and she had to work with her business manager to set up an LLC for the property. But then it's but then you set up the LLC, there still has to be an address tied to it, where the tax bill goes. So I remember talking to the business manager, if we tie it to our office address, then the world knows at least somebody of importance lives there. It's almost like the whole thing's worthless at that point.
Yeah. A cynic would say privacy is dead anyways.
I agree.
Yeah, I'm getting there. I'm getting in that direction.
you're right there.
It's right there. It's a digression, but the world spends so much time trying to preserve privacy, except from the people that people really don't want to have the information.
Right.
HIPAA is there, but my health insurer gets the information. That's why I don't want to have it.
So that would be an example of a practical use case, though, for real estate with this whole blockchain.
Yeah, no, there's all kinds of stuff. Any type of contract can be represented digitally. Your mortgages can be done digitally. There's all kinds of protocols that already exist where non-bank lenders have the ability to make loans that are potentially collateralized by a real property, but actually much more easily collateralized by Bitcoin or something else of that nature. Because the Bitcoin, being a digital asset already, can be locked up as collateral for this particular set of payments. So instead of the house being collateral and needing to foreclose on it and all the other kind of stuff that is very much real world and we can't do yet, somebody can get a loan based off their digital assets and go buy a house with that. And that works fine. So all types of stuff there. And there are, to be clear, platforms that are trying to tokenize real property and tokenize the financial instruments around them. Figure just went public and has some ridiculous price. They're in that space for sure. I should maybe draw a little bit of a distinction. It's a little bit of a law nerd distinction, but I'll do it anyways. There's a difference between tokenizing real estate and tokenizing interest in an LLC that owns a piece of property. Tokenizing interest in an LLC that owns a piece of property is easy and basically about as useful as if you had done it on paper in the first place, since nobody really moves paper, it's still electronic. It's a security in almost all circumstances. No matter how you try to get around it, somebody's got to manage it or somebody's got to see to it for capital appreciation purposes. Almost impossible for it not to be, but that's what it is. Tokenizing real property is more like a tenancy in common kind of thing, where everybody with the token has some type of rights, might have possession rights, or whatever. And you can imagine if you really tokenize this, thousands of people having those rights is never, ever going to work, at least in a typical property. Maybe some type of giant collective, you could do it, but that's one difference. But.
So it's almost, there's a way for a lot of people to actually own property, like the same property, like they can own a fraction of it.
Yep.
And this way actually just makes it easier, right? Because you can have 100 people own a property. But this is like this, right? I mean, that's always been that way. It's just what's recorded with the county and structure. This actually makes it much simpler to be able to do that.
Yeah. Yeah. It could work really well for the rental market because, your token, if, you've got the right equipment on your cell phone or smartphone, I should say, your token could open the door lock. If you're renting units in some vacation place for 10 days at a time, instead of somebody needing to show up and pick up the key someplace, you just send them a token that for 10 days is going to open the door lock. Much easier.
So I can see timeshares totally jumping on board with this.
Yes.
Oh, that seems like that was like the first thing.
So even more, because each timeshare can also be represented as a token, right? A non-fungible token, which means you can have a third-party marketplace for those timeshares, which again, I believe exists now, but it's not really scaled in a way. That's one of the things with non-fungible tokens representing anything is like you really open it up potentially to opening up markets. One of my favorite please happen use cases is that every airline ticket becomes an NFT. So if I need an airline ticket, instead of going to the airline, I can go to the marketplace and say, oh, okay, there's one for whatever it costs. And the airline can get a royalty when that sells from that person to me. They do the initial sale for whatever it is, and then everybody else can have it there. If I have to cancel something, I'm not trying to figure out with the airline how to do it. Be a much better way to go.
Almost, what's that website? Like StubHub, right? When you can buy tickets from other people.
Just like that. Exactly.
There you go. See, I'm getting there. And by
the way, StubHub, Ticketmaster, all those folks are really looking into this as well for the same reasons. The industry of kind of the ticket reseller will go into this kind of digital world, and there's no reason why it shouldn't really.
I tend to agree, right? Like anytime you can, it's almost like delegating, right? Hey, look, I'm just the platform, right? Airbnb, look, I'm just the platform for people to post their properties, price it, which is ironic because like right now they're getting sued for price gouging, even though they're not the ones who set the price. But I'm not, right?
Because not my space.
Exactly. Yeah, the different attorney. We'll bring that guy on. But yeah, so it's almost like these can start becoming platforms for people to do these types of trades.
Yeah, no, absolutely. If you take this out 20 years, everything will be tokenized and different systems and platforms and procedures and everything will go around that. There's maybe some giant long tail assets, 50-year mortgages on office buildings and things like that it won't get to. But we're already tokenizing treasuries. BlackRock is managing that. It's what I tell people really, especially on the non-fungible token, is you have to think of it like media. It's a piece of paper. Mm-hmm. And if you ask me how to regulate it, I'm going to ask you, what does that piece of paper do? Is it a paper towel? Is it a piece of toilet paper? Is it a stock certificate? They all get handled very differently. Non-fungible tokens are the same thing. So some of them represent this JPEG art that was very big a few years ago. There was a craze.
Remember
And everybody calls them NFTs, but that's like the tip of the spear kind of use case for NFTs. So now everybody's, oh, NFTs are nothing. It's no, NFTs are spectacularly powerful. And in the real estate world, if you tokenize a piece of property, it's going to be an NFT. It'll be a non-fungible token because real estate's not fungible in most cases. And, that transfers very easily and you can do a lot of cool stuff with it.
So from your end, on the law side, where do you fit in all this? As you walk in as the big shot attorney.
Yeah. I try to never walk in as a big shot. It's kind of a bad thing. But putting that aside, what we do and what I do a lot of almost looks more like consulting than law. Because the client will come in and they say, this is what I need. And I'll be like, okay, why? And they'll be like, because he told me it is. I'm like, okay, no. What are you? Head start. What are you doing? We really tend to build things from the ground up that way. And once we know what the technology is and what the value proposition and use case is, at that point, a lot of what we do ends up remolding that. And we're still, quote, practicing law, but we're remolding it in a way that we already know from experience isn't going to trip any major alarm bells. And then historically, for a long time, our country was very much against digital assets. Right. So the next piece of it would be global arbitrage. What places got friendlier law? Where can we start this out? Where can we start rolling things out? So a lot of international stuff. To give you a couple examples of those alarm bells, because there are some just ones that people fall into so horribly. You can't have a token that is just going to have revenue go out to it, because you may very well end up sending revenue to people in North Korea and anywhere else. That's a problem. You don't really have, all other things being equal, a way that you're locking your tokens to just where they should go. So that's a problem. You also have the issue of tax reporting. Like if you send people over a very low amount of money, I believe right now it's $600, but there's talk of even dropping it. You might pick up 1099 and W9 requirements, and you can't do that to a token with any way of getting it to go to the IRS in a way that they're going to be able to identify it. There's models that we put in place that allow you to have a revenue generating token, but we need the right information so that we can comply with law. That's an easy one. Another one that a lot of people get caught up in is Secrecy Act, Treasury management, all of the know your customer, as we call it, KYC, anti-money laundering stuff. It is super easy, all other things being equal, to launder money using digital assets. It just is. Anybody getting into this stuff, whether you're running a platform or just participating in something, needs to be aware, okay, is the know your customer stuff happening? Do we know for a fact that we're not laundering somebody's funds in some way, shape, or form? Those types of things, we as a firm already have that baked into our intelligence. That's the really most basic stuff. It's, yeah, no, can't do that, have to do it this way.
It's compliance.
Yeah, that stuff is compliance. Yeah. And it's such a funny word, compliance. I'm an innovation guy. Okay. I'm an applied use case guy. So, the way I look at it, like, you have to comply, but to some degree, these are just the obstacles put in front of you that potentially prevent you from having something really cool, but you can't skip them.
Okay. Now, going back to, because there is some compliance, all that, what safeguards would be necessary? Because if this is going to go mass adoption, how do you add guardrails to this?
Okay. The traditional law approach, and therefore government approach, is to try to squeeze the new technology into the old box. And that is a partially successful way to think of it. It doesn't work in all cases. And decentralized exchanges are probably the best example. The government has no idea what to do with that from a regulatory perspective. And candidly, I have problems thinking about it too. It's just different. But for a lot of things, they've gotten to a point where it's okay, you're a centralized digital asset exchange. You are going to need to comply with Bank Secrecy Act and Patriot Act, and all of your account holders need to have whatever they're going to have. There's a lot of talk around custody versus non-custody, because if something is custodied, you need to have a license to provide custody. And the simplest way to think of custody is it's the gold in the vault. It can also be very much intangible. Everybody's treasuries, nobody's actually holding the paper that is the treasury, but somewhere it's sitting in a custody in a vault. There's 4 big banks. State Street is one of them, I think, Bank of New York. Anyways, To your question, I take a rules versus standards approach. The rule is whatever the law is, and you're not supposed to break that. The standard is, why do we have the law in the first place? If you think about it in the context of driving a car, the standard is don't run anybody over. The law is don't run the red light, don't speed, don't do that. And we do that because it's really hard to enforce standards, but enforcing rules is relatively easy.
It's black and white.
Do the time, right. And there's some efficiency loss in that because I, for instance, feel like I can probably drive a little bit faster than the speed limit, but I'm not allowed to. And that's just for the way it is because there has to be a bright line. With what we've got going now with the new technologies, and it's not just blockchain, it's artificial intelligence, it's AR, VR, Metaverse, so many things. The laws don't fit a lot of the time, but the standards still do. So, what I've told a lot of my clients over the last 6 or 7 years, particularly while the US government has been unfriendly, is number one, don't rip anybody off. Simple, right? Yeah. Don't rip anybody off. If you're coming close to ripping somebody off, that's a problem. We need to not do that. Don't engage in what I call asymmetric information transactions, but most people would call it insider trading. Insider trading works great for securities, and for 80 some odd years, that's been there. But if your digital asset's not a security, and they really, in many cases, should not be categorized as securities, it's still a problem if you're buying and selling the stuff because you have inside information. That's a version of ripping people off. So don't do that. It's A lot of the advice comes down to everything I needed to learn, I learned in kindergarten. It sounds silly, but really, clean up your own mess.
Got it. And you mentioned artificial intelligence, which I think there's a lot going on with it. I also, and this is my personal belief, I think it's also somewhat of a buzzword in some cases, right? Like people are like, oh yeah, we incorporate artificial intelligence for this. I'm like, do you though?
Yeah.
Or is it like, so what are you seeing in that space in relation to all
this? It's moving so fast.
True.
No one has any chance of keeping up with it. Certainly the lawmakers don't have a chance of keeping up with it, at least till we automate that practice, which we will. It's a buzzword. But it's like internet in 1999. Major bubble, and I used the internet to justify raising $100 million because I've got a sock puppet advertisement for the infamous pets.com. But it didn't mean the internet wasn't powerful. It wasn't going to come along. And that's where we are. And artificial intelligence has got a special place in kind of the American folklore with Terminator movies and everything since.
Oh, yeah.
So, of course, it's going to be the buzzword. But, what I'm seeing, and when I say seeing, actually being demonstrated at conferences that I go to, this is not fantasy land. In some cases, it's not scalable yet, but it's happening, is the agents are coming. And you can think of the agent as like, if you've got a Venus flytrap, the agent's the part that collapses on the bug. And it's got its connections to large language models, which are the LLMs, that's ChatGPT, that's Anthropic, and all those types of places. So it's very much like that kind of a plant. The large language models are what most people are currently thinking of as artificial intelligence. I can go and I can ask it a question, or if you're really good, I can prompt it and it can do a lot of stuff. But when we've got the agents going and they're autonomous, that is Brave New World type stuff. And it's coming fast.
Where do you see blockchain and AI as far as like real estate's going?
As far as,
because there's always the talks of, oh, this stuff's going to replace certain jobs, or this stuff's going to do certain things. And I'll go into my thoughts, but I kind of want to hear yours first, basically, because maybe it might change my mind in terms of the agents, the investors, like, how are things going to really change?
Okay. Massive turnover. It's very hard for me, having lived the life I've led, to say universal basic income is a good idea, but it is, because you're going to have a lot of people who need the help, and if they don't get the help, then start building the jails, because that's what hungry people who need medicine do when they can't get food and medicine. And it's going to be at that level. We do a lot of thinking about where things are getting eaten in kind of what order. The knowledge professions are accounting, lawyering in a lot of areas, and we spend time thinking about what's going to go and what's not going to go. Anything that's take it back, do the research, and come up with a thing, the consultants, that stuff is all very much on the table for being gone for a while. The trades are going to be safer. You're an electrician, you're a plumber, something's got to get done. That needs robotics to catch up with it, and that's a longer haul. So, that's great. Things like receptionists, physicians, service, waitress, waiter type stuff, that stuff all goes the way of the dodo, which is a big deal. And also the probably biggest one is getting the trucks automated, because truck drivers is one of the most major vocations in the country for sure. What replaces it? And I have 2 kids, so I think about this a lot too, because it's a question, what should we be focusing on? 2 things that come up. One of them is on the fly knowledge. So the skill set of let me take that back and research it and give you an answer, that's going to go away. The skill set of we need to have an answer right now is probably going to stick for a bit. Any of those types of things. And then soft skills, emotional intelligence is massive. Being able to read people, being able to tell a story, not necessarily a Hollywood movie, because we've got AI agents that are absolutely going to be able to do that formulaically, but being able to tell a story in order to influence people in whatever context you're doing is a great skill set. Anyways, that's a little far away from law, but that's my thoughts.
No, but I think there's some validity to it. I know. So recently I had a closing with a buyer, and when we were doing the request for repairs, typically what I like is I don't just say, hey, we need $9,000. I actually usually include a letter from the buyer. Hey, here's why we need it. Because if you don't give them a reason, it's just going to come off as being a jerk. And I remember I was working with the buyers on the letter, and my clients actually made a comment that they were impressed that I wrote it without AI, because you can always tell when AI is involved for now. Yeah. And I do, and because in the other part of, especially on the AI side, it's all about the prompts, right? I remember talking to someone who works for a big marketing department for a big company, and I was like, hey, do you think that all this stuff is going to replace you? Because it can come up with marketing campaigns, it can come up with all this stuff. And for some people, yes, but someone has to give it the information. And that's where these higher level people, like their jobs are, we'll say, safe for now until AI starts learning more of that.
Yeah, that's right. At the end of the day, there's very little that anybody does that is not able to be automated at some level of technology. How long does a surgeon stick around? You would think that a surgeon is going to be like a way high position, but the reality is surgical robotics is a big industry, and it's a hell of a lot more precise than a person is.
Yeah, I know someone, she just had a recent procedure, and the doctors were there, and like, yeah, we use a robot, they do this, they do that. And I'm like, that's really cool. Can I watch? They said, no, that's weird. And then I was like, what? I'm like, it just sounds so cool. Yeah. But yeah, I do see the waiters, the waitresses, some of those. Again, I think there's going to be some level of people who want a certain experience. Mm-hmm. And sometimes that person-to-person experience. But You're right. When minimum wage went up, all of a sudden McDonald's, you can now order on your own.
Yeah. No, that happened. And I really hope that the folks who are in control of that type of thing are paying attention. Because here's the thing. At the end of the day, most people work because they need to bring home a paycheck to pay for stuff. Mm-hmm. Most businesses employ people because they need stuff to get done. But labor is a line item expense in most places.
That's a very good way to put it.
If you are looking at efficiency and you're going, okay, I can spend $30,000 on this automated kiosk and it's going to save me 3 headcount, that is an easy decision.
It's a no-brainer. Yeah. It's just like a really easy example would be like a parking lot. You press the button, pull the ticket, you drive out, you pay, and you move on. And you just saved yourself 30, 50 grand.
Yeah. No, it's even going farther. Like I see the ones that have QR codes, and it's just like, all right, scan the QR code, and we're going to take it from your Apple Pay or your Google account, and you're done. Yeah. So you don't even have the box that needs to be maintained anymore.
Oh yeah. Or was it the Amazon, Whole Foods, where like you just walk in, put everything you want in the bag, and walk out? Yeah. If you're ever bored, SNL did an amazing skit on that, making fun of it. It was, I won't go into too much detail on, but it was fantastic.
So if you're ever bored, get a tour of an Amazon warehouse and check out the robotics in there, because they have taken it to such a level in terms of how they handle their shipping facilities.
So then couldn't an argument be made that if I'm a congressperson, I'm going to be like, I need to protect jobs. So that's where laws could start going into place. No, if you reach a certain size, certain revenue, a certain percentage of your workforce has to be human-based, which is a really weird way to word it.
Yeah. All right. Fundamentally, we are at a place where law can not keep up with technology. If you just look at our systems designed to be slow, we have 2 houses and checks and balances, and all these people need to get educated on stuff that the experts don't even know everything. We're way beyond where that's efficient. So and meanwhile, technology on the adoption curve, it's doing that. And we're actually somewhere here. We're vertical. We are on the vertical asymptote. It's just never going to keep up. The Congress people hopefully allow themselves to be educated. And one of the biggest problems we have is that they're on 2-year terms or whatever it is, and they have to do something. I have to do something. Got to do something. And they sometimes do things that are just ridiculously inappropriate and damaging. So you have to need to figure that out. There's probably a shift in taxation at some point that's necessary. People talked about the robot tax because, like I said, the technology always wins. You're not going to keep the technology down. That's not going to happen. So here we are, we're staring at this world where AGI is not too far away. We're going to be dealing with superintelligence. Robotics is happening. It's all happening. At that point, it doesn't necessarily make sense to stick with a graduated income tax because a lot of people are just not going to be employed, but you still have to bring in revenue somehow because you have to take care of said people, or you have to bring expenses down, which in the energy sector, for instance, I think there's a lot of hope that some of the newer technology can just bring that price of energy down, which then gives you cheap food and cheap water and is a wonderful thing. But we're getting a little far afield.
Yeah, no, for sure. but it's real.
Yeah. Oh, yeah. No, it's real. It's here. And like I said, people, if you want to adopt a meme, the technology always wins. Is a good one. Like there's the Luddite thing never works. You're not going to be able to go back and say, okay, put the genie back in the bottle. It's not going to happen.
It's done. Yeah. So I guess like it all starts with let's use real estate as an example. So you have a real estate investor. I buy homes to rent out, all of that. Really, a lot of this technology can start even before you even own the property. It's, hey, look, here's my criteria on buying. Do the calculation for me.
Oh, yeah. Yeah.
And then send me properties.
Yeah. To take you through it. First off, owning real estate is a really good idea because what's not going to be replaced is needing shelter.
Thank you.
And you're welcome.
Thank you.
I posted a testimonial. I know, but it's true. In general, I tell people to own shit. What do you want to do in the future? Own shit. Own things that are revenue producing. We're not making more land. We may make some undesirable land desirable. That might happen. In general, it's still a hedge against inflation. All the other stuff's great. If I want to buy a rental property now, I can use large language models to help me figure out where there should likely be a unjustified price kind of decrease, lower pricing with whatever demographic kind of things are approaching, so that on some type of a term, I can try to look at some kind of a capital increase. I can try to look at some place that maybe has lower rents now. In the future, they might grow further, or beware of the opposite, which is also absolutely there. And then in terms of buying the property itself, what is going to happen to brokers? Don't know. There's obviously some inefficiency there. We'll skip that part of the discussion.
Tons of inefficiency.
On things like a housing inspection, it becomes more of a data hunt. And as far as pricing stuff out, you can easily have a large language model tell you what the price is for certain types of repairs in certain parts of the country or cities and certain seasons are. You can look at that. And for that matter, on the sell side, you might look at the seasonality of repairs and go, it's the summer. I've got an AC problem. Maybe I should take care of that now.
Yeah. Or even the opposite. It's summertime. Now it's actually cheaper to replace a roof because business is slow.
And then the other piece, and there are companies that are in the large companies renting houses now already doing this. They're using IoT devices, Internet of Things, to give them feedback on when things are going to break. And so I can replace that pipe before it develops a leak. I can replace the lighting if I'm a large renter and it's important that all the lighting's there. I'll know before the light goes out that the light's about to go out. It's a big deal for the insurance companies also because they can insure and provide premium models that are based more upon actual data than what they're doing. So anyways, technology obviously creeps into everything.
Yeah, even from the agent perspective. So right off the bat, when people have asked me about it, I said, first of all, there's an oversaturation.
Right.
Like it just is. It's always been that way. But then once 2020 hit, 2021, in a lot of cases, like I've been fortunate, I've been helping clients buy and sell this year, but I've been hearing of agents who haven't closed a single deal. Right. There's just not enough business to go around. But then where does, artificial intelligence, where does a lot of that play a role? And I think because the problem with agents, that's such a low barrier to entry. into that space, as when you were taking some of the exams, like 99% of the questions aren't even relevant.
Yeah, no, not at all. And by the way, when I got I have a real estate broker's license in California, and I'm a lawyer, and this is not true anymore. But at the time, it did not require me to have any experience to get a broker's license. Pass the test, and you've got the license. And it was one of those things like, why would I not do this? And I've only used it for my own buy side stuff. I don't even want to do sell side myself. I'm not a professional. It's not what I do. I don't know the different tricks of the trade and everything else. But yeah, they definitely oversaturated. And that's broker agents are just everywhere.
Yeah, it's true. The system's very broken. There are solutions, but no one's going to like it. So
Right.
that's a whole nother conversation. But in terms of like artificial intelligence, I think one of the challenges, at least from what I've seen, is like AI can like do a lot of the analyzing, can do a lot of that stuff. But especially on the buying and selling side, there are a lot of emotional aspects that's hard to put a dollar amount on, right? Like, oh, is there a view? Yeah, but is it a mountain view, ocean view, city view, commercial?
I think you're right. The view thing, the AI can check into the comps on sales on houses with similar views and price that out without even thinking about it. But on the sell side, the story piece of it, is this a good house for kids? Are you selling to a couple that looks like they're going to have kids, and the house that you're showing them is impossible to baby proof? My personal life, I had to get rid of a house I absolutely loved because we had our first child, and my ex was just like, okay, this place is a death trap. And maybe it wasn't. But if you're in the agent broker place, that's the EQ kind of component that, right. And you can absolutely, and there's like websites that you can get a personality profile on anyone who you can find on LinkedIn and know what approach is going to work with them and everything else. But you still need to be there to help tell the story in terms of the sell process to actually generate the interest. That's one of those soft skills I don't see going away anytime soon.
Yeah, I mean, it's so many times I've come through and people are showing me around, and like you can tell by my face that I'm bored. You keep talking, but it's nothing that's relevant to me. Versus like I might have someone say, "Hey, what are you looking for in a home?" Yeah. But you have to ask that question up front so I know what to point out, so I'm not wasting their time. They may not care that the plumbing was redone. They're probably assuming that the plumbing's fine. And so, yeah, I think that's where some of those soft skills will last for now, unless people start, I don't know the best way. I was actually thinking about on the drive in, unless people start devaluing the process of buying and selling a home. If they make it more transactional, then yeah, there's really no reason for agents. Do I like the house? Yes. And then you start throwing out prices. It's horrible negotiating, but it's a way to do it.
Yeah. It's interesting. Not exactly my space. So I don't
know fair enough.
Too much, but yeah, where humans are going to stick it's a real question for sure.
Yeah. No. As we wrap this up, and I really appreciate you coming on. This has been really interesting. What are some things that people should be looking out for, should be considering in this blockchain world, and even from a legal standpoint or just day to day?
Yeah, I'm going to go back to just getting into your head that the technology always wins. There's still a lot of skepticism, and it's normal with new adoption of technology. The first use of every technology is always porn, and the second one is a cat on a skateboard. Like that's how it flows out. It just is. Right. And then you get people who look at that and go, that's useless. That's for criminals. That's just about money laundering. It's not. There's more to the curve from that perspective. It makes sense to pay attention to it from the financial perspective. There's a whole world of digital assets out there that represent different things that are bought and sold in ways that are not the same ways shares of stock and bonds are bought and sold. It's out there to explore for people who are just there having stuff in their life. It's going to creep in more and more. And again, when you hear blockchain, unless you have a reason to think otherwise, it's one more piece of technology underlying stuff you use every day. That's where it's going to go. Now, we will get to a point, hopefully, where we start looking at things like voting systems for elections that are blockchain oriented. And I guess if I'm going to pitch to anything here that's not just work oriented, having an intelligent public that trusts that type of system so that when the California ballot proposition comes out about whether to shift our voting to a blockchain-based system, nobody's afraid of it. because it's a better system. There are other countries that are already putting votes on the blockchain, and like it's an open, immutable ledger. It's hard to screw with that. It's okay. Yeah. We've got that going. And that type of thing, I think, will be very valuable in kind of a world transformation-y kind of way. There's a civic element of getting to know this stuff. Certainly anybody who's into privacy and, how data is held should pay some level of attention, because blockchains are outstanding for allowing selective exposure to information. Your entire set of health records could very easily be held in a file that is open based on somebody having the right token. And then you no longer have doctors still using faxes, God help us.
I had to fax something yesterday, by the way.
Yeah.
And I'm like, what is this?
What is this? The answer to the question is really just an open mind and recognize it's coming. And you can choose to do with it what you want. Some people are afraid of it and want to go back. It's coming.
Yeah.
Play accordingly.
Yeah. And it may already be, to your point, may already be incorporated in their lives and they won't even know it.
Yeah. I think there's a lot of major companies that want that to be the result. They don't want disruption, as opposed to the startups that specifically are like, we're really disruptive. But then you've got the banks that are like, we really don't want disruption.
Right.
There's a tendency for them, like there are banks that'll go, this is how we're using the blockchain to do exactly what we've always been doing. And it's like, but that will be a choice for a long time, I think. A lot of the consumer spaces is just big companies trying to figure out how to give people the experience. Because again, blockchain's biggest enemy has been bad user interface, bad user experience.
Sure. Which would make sense. All right. Thank you, Josh. How can people get a hold of you if you ever want to reach out?
So email is certainly the most thing I pay attention to most. So it's just my first initial last name, J Lawler, at zuberlawler.com. And then on most socials, I am at JLawlerCal. So that will cover Twitter, WhatsApp, and Telegram, and some stuff that people in the United States don't use very often. And those are the best ways. And LinkedIn. You can always find me on LinkedIn. Super easy.
All right, perfect. Thank you so much, Josh, for coming on the show. I really appreciate it. Thank you, everyone, for watching or listening, and I'll talk to you guys next week.
Thank you, Rick.
Thanks for tuning in to The Key to the City of Angels. I hope you found today's episode helpful as you navigate the world of Los Angeles real estate. Whether you're looking to buy your first home, expand your investment portfolio, or sell in this competitive market, I'm here to help you succeed. Let's connect. Visit my website or follow me on social media to learn more about how I can help you achieve your real estate goals. And if you're ready to take the next step, don't hesitate to reach out. I'd love to work with you. If you've enjoyed this episode, be sure to subscribe, leave a review, and share it with someone who might benefit. Together, let's unlock your potential and make your real estate dreams a reality.